I'm Michelle Graves, your host on today's segment of The Power of Money. I'm glad to have you here. Now, at The Power of Money, we are interested in three things happening. First, we want you to get the necessary education so that you and your family can make the decisions that will impact positively on you in your financial life. The second thing is that you be empowered to prosper. I only want the best for you. And you can only get that if you have education and then the drive to make it happen. And the third thing that is so important to me is that you recognize that life is more than a journey and that you be energized so that you can begin to participate in the truly joyous experience of living. So, here's to empowerment. Here's to education, and here's to energy. I'm Michelle Graves, your host, Power of Money, and here we go. And here we go, and thank you for being a part of today's broadcast on The Power of Money with Michelle Graves, where I've had the distinct pleasure of being on DATV, where this particular show broadcasts out of, for 9 years. I have a phenomenal production crew under leadership of Ben Artis, as well as in-house staff, Melissa Constantine, Dale, and all of them. It's one big family up here. And while I may live in Cincinnati, I do diligently make the commute to Dayton for production. This show broadcasts throughout the United States, and we're pleased to announce we've just picked up one new public access station in Charlotte, North Carolina. That'll be rolling out this summer. And I'm just excited about the opportunity to share information with you that can improve the quality of your lives and the lives of your family throughout the country. It's exciting, although with YouTube, you can watch this information as well throughout the world. So I wanted to just thank all of you for being just so wonderful, so faithful, and just thank you. I appreciate you. You make me do this show. You motivate me because I know you don't know unless you've been taught. And unfortunately, in America, what we have been taught, and the subject of today's show is your budget. Yeah, did I say budget? Which has a lot to do with your spending habits. Now, before I dive deep, and it's a tough subject. One of the staffers here said, you're going to talk about that. I don't have a choice. I don't have a choice. Because if you don't know what you're buying or how you're spending, all roads are going to lead to disaster, blow up, bomb out. It may not be right now. It may be over the course of 40 years as you prepare to go to retirement and you realize, I don't have any money. And don't feel bad, you're not alone. According to statistics, the average retiree retires with less than $25,000. So that's your Social Security, which was never designed to be your primary source of retirement income. That's not what FDR had in mind when he did that. Social Security was on a three-legged stool. The first leg was your personal savings. The second leg was your pension. The third and final leg was your Social Security. Therefore, it was never designed to be all in all, which is what it has happened today. People depend upon their Social Security income for everything because they have so little in personal savings. The pension plans are gone. The big GMs and Fords and all the big manufacturers had promulgated the defined contributions, defined benefit plans where you know what your benefit, that's all gone. They flipped it over to the 401k, which you contribute to. The employer can match, should match, and that's it. And your personal savings, which is good luck with that. Yeah, but it all starts with something as basic as, what am I spending? And why am I spending and how much am I spending? And we can go on and on and on. But today's show, we're going to cut to the basics. I'm going to labor with you. Did you hear me? I'm going to labor with you because it's not easy. It's not fun, but it is necessary unless you want to give poverty a big fat kiss, unless you want to give bankruptcy a big fat kiss. It'll take you down the road. Now, the only exception, and I say this, is if you have staggering medical bills, which under the Affordable Care Act, if you're not making a lot of money, you should be on that. If you're on Medicare, no, those days are over. You will have shocks, but nothing like it used to be. So my goal today is, can we keep it simple? Can we keep it basic? Can I give you 40 years of insight on how people are able to control this spending thing? And just need to know, as a matter of record, that in our system, our entire capitalist system in the United States, 350 million citizens, adults, is that 80% of our economy is driven by our spending. Can you imagine? Everything is generated by our spending. Okay, so we work, we get a check, we use the money primarily dealing with necessities first, and then we've got happy time. Okay? Happy time. And our country was so clear about happy time that they started issuing credit cards 20 plus years ago. Okay? To facilitate happy time, but you're going to pay for happy time because they're going to charge you interest for your happy time. So maybe it won't be so happy when you get the bill. But that's what America is about. Spending money. Bringing in revenues through taxes, through your job. And that money is spent right now to the tune of $44 trillion in debt, I believe, paying interest to people that have purchased debt, and we got to pay them. Yeah. So it's consumers, the federal government, and the business community who responds to consumer behavior and spending patterns, which, by the way, if the Federal Reserve Bank has its way, and I just know they are, Mr. Powell, I know you're going to do it. I know you're going to do it. I'm not mad at you for doing it, but just so you know, when you do it, this country's going to go in a tailspin. Yes, the Federal Reserve is going to raise interest rates so that credit card interest is going to go up because the contract clearly states that it can go up, and when given the situation that's coming, it will go up. So I want you to kind of get ahead of the game, or else you're going to go tumbling down this river. Because when the Fed puts the screech on interest rates and gives, again, debtors the right to raise rates, so mortgage rates are going to go up. Why? Because they're tied into bonds. And credit cards are going up because that's how the bank makes their money. They pay you 0% and they lend it out at 26%. That's called profit. Wish I was a bank. But that's how it works. But it starts with Americans being trained to spend money and the feel good that it causes until it comes back to bite you. So I decided for this show that I would actually take the time and really look at your spending and present it to you in such a way that you could follow it, you could repeat the show, and you could begin to get a hold of your behavior. Because this is going to have really bad consequences. Okay? I do believe, without a shadow of a doubt, that we are heading for a recession in 2023. that things are going to be very, very difficult. For those of you that are living on fixed incomes, it's going to be particularly hard because the large amount of your money is spent on your housing and your food. Those two things. And because food costs are skyrocketing from inflation, from Ukraine, from gas, it's going to be very, very hard to make things go. But let's start with the basics, and we can begin with saying this. Most people don't intend on going down this road. But let me just say here, it's important to you to do this budget so that you can finally take the scales off your eyes and see this for what it is, which is robbery. Yeah, and you're doing it to yourself. Nobody's putting a gun up to your head telling you to do this. So let's start with, it begins with getting a handle on your money, known as cash flow management. That's what accountants and people that manage money talk about. What kind of money you got coming in, what kind of money you got going out. The difference between what's coming in and what's coming out is going to tell you whether or not you're managing, you're not managing, or you're not even on the playing field because you're bankrupt, okay? But you do want to know what you got coming in and what you got going out, and I do have a very nice system that you can take advantage of. Ben, would you show us part one of your, okay, can we get it any better because it looks kind of wiggly. But with your cash flow management system, it begins with, first, your income. You got to know your income. If you're self-employed, you're going to need to average your income, okay? You have to do this. But you need to know what your weekly income is. This is gross. What your bi-weekly or twice monthly income is, and then your monthly. So you want to look at what, we're looking at monthly behavior. But so if you're paid every 2 weeks, you want to, again, calculate what it looks like on a monthly. And how do you do that? You look at the 2 weeks times 52 divided by 12. Got it? 2 weeks times 52 divided by 12. It'll give you your monthly. You want to look at your salary. You want to look at your bonus if it's gross, any loans that are due, your rental income if you rent property out. That is actual income. We don't want to get into rental tax deductions. Any gifts that you have coming in as a part of your income, interest that you are collecting, not that you're paying out, interest that if you have extended credit to others and you are doing the legal thing, which is contract and interest. Dividends, you've got stocks that are dividend paying. Again, there are dividends, you need to calculate those, and all other income generating items. Now, it's really important because a lot of people have what I call side money. Side money, the IRS doesn't know about, nobody knows about but you, but let me tell you something. Side money is really big today. People do all kinds of things for cash, okay? They do. I was at a flea market the other day, just visiting, because I haven't been there in a long time, and I saw cash going all over the place. Huge place. Trader's World is huge. And I was out there because I haven't been there, and I wanted to see how things were, and it's still huge. And people were all over the place selling stuff, buying stuff, but everything I saw, with few exceptions, was cash, which is you saw something you wanted, you pulled out your wallet, you paid cash. The business owner definitely, I don't care what anybody says, I don't believe they're reporting it, okay, to the IRS. That's their side money. But you need to know how much side money you're making. I don't get into tax business, but you do as far as your budget. You need to know, is that side money consistent? What's it costing? And put that in your budget as well so that you know on a monthly basis what you're bringing in. Now that's all on the income side. And as I say, for all of you that are listening in, the flow chart that I have, the grid is available for you. But the second part too, which is your expenses. Now this is where it gets dicey because people don't want to deal with how much they're spending. It's just easier today to just don't talk about it. But that's okay, because if you don't know what you're spending, trust me, at the end of the day, you're probably broke. But let's look at your expenses and let's make sure they're listed clearly. Let's start with your fixed expenses. This is every month, never changes. Every week may never change, but these are expenses, okay? Your church tithes and offering. If you're a tither, you need to know what you are paying every month. It can be weekly, bi-weekly. Again, same rules. The amount of your offering times 52 divided by 12. Your savings, okay? Why is that an expense? Because that's for your future, okay? Income tax deduction, that's an expense. Your Social Security, okay? Retirement plan, how much is of that? Your group insurance, okay? Now, Social Security, retirement, and group, you pay into, usually through your employer plans. You can see it on your W-2 under these different deductions. Your Medicare would also be there under other. Your house payment or rent, okay? Your second mortgage. And then if you have a third mortgage, you say, what's a third mortgage? Well, a lot of people put a mortgage on your house for furniture you may buy, or some very crafty retailers may allow you to do a third mortgage for a very large purchase. That means they're in third position with your first mortgage or second mortgage, which is usually a home improvement, furnace, roof, that type of thing. Then your third mortgage, which is usually some type of installment debt. Less frequent today. Home improvement loan, that's an expense that needs to be documented. What are you paying out on that? On your cars, that needs to be documented. If you're involved with a finance company, truly finance companies were big in the day, Ford Motor Credit, Citibank, a number of finance companies who charge very high rates of interest. You found yourself walking into a furniture store or even a car lot and it's being financed, and that needs to be shown. Any insurance you need to show as a fixed expense, your homeowners, your rent insurance, your motor vehicle insurance, your health insurance, that's correct, even if it's payroll deducted. You may have disability like Aflac or whatever, that needs to be shown as well. And finally, your life insurance, okay, which enables you not to be in debt to anybody if you buy it right and you pay the right premium that is not only affordable, but the goal is if you should die that the debt is paid off. You want to subtotal all of those fixed monthly expenses. Subtotal them. I'm going to summarize again because I really need you to know this. These expenses don't change. You don't have a lot of flexibility on these expenses. Your church tithe and offering, your savings. Okay, what's my rule for savings? Put aside 20% pre-tax, income tax deduction, Social Security, what you're paying in, retirement plan, what you're paying in, your group insurance, if you're getting any kind of group insurance, accident, critical illness, death and disability, any kind of group insurance plans that you are paying for need to be reflected as an expense. House payment or rent, second or third mortgage, home improvement loans, motor vehicle loans, okay? Your finance companies, if you're involved with them. Let's just be transparent. Your home insurance or motor vehicle, health insurance, and life insurance. Tally all of them and you will come to a subtotal for your fixed monthly expenses. And I will say to you, this little page here, it's not going to change. If anything, it may go up. Okay, because that's one of the things that we're dealing with right now with insurance and inflation and claims, etc. The insurance company's not going to eat it. They're going to pass it on to you. Now, we move to the third category, which is under expenses, section B. And that is your flexible expenses. That would include your utilities, electric. You're killing me. Gas and oil. Yeah, that's utilities, not cars. Telephone. All the telephones. What is it costing you monthly? Water and sewer. If you're living in an apartment, typically they pay the water and sewer. If you're a homeowner or renting a home, that's going to be on you. You can go on an even billing plan. I would recommend it so you know what your monthly outlay is going to be. Cable TV. Oh my gosh. Oh my gosh. You're going to have a heart attack. But then again, you may not. You may not care. I got to have my cable TV. Okay. I like Me Too. The TV channel, Me Too. I love it because you got Hogan's Heroes. You got Carol Burnett. You got Bonanza. You got Gunsmoke. You got, what is it? The Lawyer there. You got Star. I mean, I like it and it's free. Okay, when I do watch TV, I do watch Me TV because it doesn't cost me anything. Of course, I'm inundated with all the advertising because it's cable TV free. You don't have cable, but you still want to know, what are you spending on your cable TV every month, including the equipment box if you have it. Lump it all in. Now, under your cars, you want to look at how much are you spending for gas. Now, you know right now and everybody's shell-shocked, but you still want to know what you're spending for gas a month. Okay, you want to know about your oil. If you're getting your oil change with your older cars, you must get consistent, regular oil changes. Okay, repairs and maintenance. The other car got to be fixed. If you're in a garage or parking situation, what is that costing a month? If you're paying downtown or wherever you rent, put that down for work. Bus, taxi, train, if you're taking subways, if you're taking a transit, you're taking the metro, you're taking the Amtrak, you need to know what that looks like. And your toll taxes, because that is a fixed amount if you're commuting and driving. If you live in the Chicago market or other markets, you know that tolls are an integral part of how you get to and from work. So you need to know what that looks like. Under food/drugs, you need to know what your groceries at home look like. What are you spending a month? You need to know what restaurants and carryouts. Okay, save your receipts, tally them up. You need to know what you're spending to eat out. Most Americans are spending a ton of money eating out. Why? Because they don't want to cook. I get it. Why cook when I can eat out? Well, if you could afford to eat out at the level of quality of the food, that's one thing. But for most of us, it's fast food, and that's not even healthy living. But log it in anyway so you'll know what you're spending every month at McDonald's, Panera, Wendy's, Chick-fil-A. Everybody list it out so that you will know. You want to list what you're spending to eat lunch at work. You want to know what your drugstore tab is, and various and sundry. Okay? You want to total all that out so you can come up with a monthly expense. I can tell you right now the groceries have gone through the roof. I can tell you right now that drugstore expenses are high, and you need to look for every opportunity to get a discount on those things, because with inflation, those are expenses that are going to continue to track upwards, and it's not going to feel good either. Under miscellaneous, we're still continuing. Child care. Whoa, that's a big one. That's a big one. And you can talk about tax benefits, but when you're fronting that money up front, it's bad. It's hard. Gifts, birthdays, etc. Well, maybe you don't give gifts. Maybe you don't honor birthdays. But just in case you do, you need to know that a birthday card, unless you're going to the Dollar Tree, is going to run you about $5.99. That's Hallmark. And you got a lot of family members. Maybe you need to get the template to make birthday cards for your computer and save a bunch of money. Of course, everybody will say you are incredibly tacky. Did you see what she sent me? However, if you've got a lot of family members, say 60 cards a year, and you're pumping $6 a card, do the math. Okay? Get the app. How much you are paying the children for allowances, household, doctors, dentists, optometrists. These are miscellaneous, but they're predictable. Now let's get down to where it gets a little squirmy. Credit card payments, MasterCard, Visa, Discover, pennies. Write it down. Write down what you're paying, not the minimum. Write down what you're actually paying. And while you're writing it down, why don't you check your contract and see what the interest rate is? That might be an assist. You may want to also go to bankrate.com on internet. I think they have an amortization chart for these kinds of things. You never get out of the credit card what you put in it. And the further away you get, the less you understand why you're paying all this money in interest. Because you forgot you bought it, or the trip is a faded away experience now. But the credit card company never forgets. And they want you to pay the minimum because that's where they make their money, not in you calculating to pay it off. Okay? But you want to list any other kinds of payments that you have going around credit card. Any payments that you have regarding credit card. Then let's look to another category that makes everybody unhappy, and that's entertainment. How much are you spending on newspapers, magazines, theater, sports, not just cable, which you've already deducted, but actually going to watch games? That includes your parking as well. Tobacco and candy, vacations. This is a big one. Most people do not save to vacation. I will tell you, you should. That's a big ticket item. It is. It costs to have fun. And if you haven't put aside money in your savings, then you're going to have to paper it another way. And that is typically with credit cards. Okay? It really is. Nobody's giving away a vacation unless you are on Let's Make a Deal and you won the vacation giveaway. Otherwise, it becomes an expense. Other recreation. People today do everything for fun. They go to soccer games, baseball, football. They belong to certain types of clubs. They go to the casino religiously. You need to know how much you're spending. Okay? You really need to know. It may come as an awakening, and you want to see what you're spending every month. Okay? You want to see that. Under education, another category: tuition, textbooks, music, dance, self-improvement. That would be yoga and all the things that you would consider continuing ed, those types of things. You want to make sure you know what it costs. Then the category of clothing and personal. Whoa. Yeah, I did it to you. Clothes. How much are you spending a month on clothes? How much a month are you spending on hats? That's a specialty, but if you're a hat lover, you're spending money. Shoes. Oh, no. You don't want me to tell myself the truth, do you? I'd like to. I'd like to know that you know what you're spending on shoes. And without being harsh, there are millions of people, a lot of them women, who are shoe addicts. They cannot live paycheck to paycheck without spending money on shoes. Yeah, ask your husbands. Ask their boyfriends. Ask her. How much you spending on shoes every month? You'll be stunned. Write it down. Laundry, dry cleaning. This is a big one. For men that have shirts, the laundry is probably the best press you're going to get. $1.95 on Tuesdays. Dry cleaning is expensive. Going to get more expensive because it uses oil to clean clothes. And oil is going this way, not this way. But they do use an oil derivative for clothes. Unless you want to go to the grocery store and buy a dry cleaning type of product, Dry-L or something like that. But most people don't do that. They don't. They just pay the money at the dry cleaners and eat it. Log it in. And finally, beauty and barber. That's for your hair and for your beards or haircut, whatever. Okay? But you need to tally all those up. Have I been fairly complete so far in terms of expenses? Because you're spending a lot of money and I'm showing you where and how. Now, I did not put down in category, and maybe I should, under entertainment where I have other, you may want to say my children and grandchildren. Because if you're taking care of all of those, no judgment, just put it down what it costs you every month to provide them with food, clothing, shelter, recreation, etc. Yeah, children have come back home. And they basically are counting on you to feed them. And you may grump and grumble, but you're not willing to let your children go hungry. So put it on your budget so you'll know what it looks like. Now, we're going to subtotal from all 3 pages, and then we're going to subtract out your expenses. And then from that, you're going to show your total income minus your total expenses, and that tells you what your total cash flow is every month. Yes, it does. Now, are you happy or sad right now? Well, most people are sad, but enlightened. Enlightened. When you go to do your monthly cash review, after you've done your weekly and bi-weekly tallies in all those categories, all of them, then if the income you're bringing in is greater than your expenses, that's known as a positive cash flow. If your income is the same as your expenses, that's called no cash flow. And if your income is less than your expenses, you have a negative cash flow. Businesses experience negative cash flow. Consumers do as well, which is you're spending more than you're making. Now, the deception comes in if you're a consumer, if you've been using credit cards to carry your bad cash flow. And according to the Federal Reserve data I just read, the usage of credit cards is going through the roof. Now, I can tell you why, because after the stimulus stopped, people didn't have any more money, and they still had wants, not needs, wants, and therefore they use a credit card. A credit card can pay your grocery bill. The credit card can pay your cable bill. The credit card can furnish your wardrobe, shoes, coats, clothing, everything. The credit card can be used in many cases to pay tuitions, books, all that. The credit card has become another source of revenue, but you're going to pay for that. You're going to pay for it because unlike a self-employed person who may use credit cards to manage their cash flow until their checks come in, when you're working for somebody else, there are no more checks coming in. What you earned is what you earned. So you want to know if you have a positive or a negative cash flow. And regardless of whether it's positive, negative, or non-existent, there's always room for improvement. And I'd say that to everyone. Everyone. Improvement in your financial condition. If your financial condition is good, then go back through your budget to take it from good to superior, which is you can account for all of the money that you're spending, okay? With a larger and larger chunk of it going toward savings, not for a vacation, but for retirement, so you will have adequacy of income when your job stops, went through retirement, or you are not, again, making enough consistent income, so you're going to lean on those savings, or you have an emergency that will require you to upfront money, okay? That's important. Your savings becomes more and more important as you age because, frankly, if you get hit by a car and you're 70, and while you're waiting on them to negotiate and litigate, you're going through all this pain and you can't work and your quality of life is zero, you will be grateful for your savings situation so that you will be able to make a living. Okay? That's very, very important. Okay? Hold on, please. Hold on. I'm going to take a look at something. So, let's come back to the show. How do you become a better spender? This is the issue. And I'm going to give you a few talking points. A lot of you may be in shock about doing a cash flow management, or known as a budget, because it is illuminating. For me in my private practice, I will point blank not make recommendations if I don't know how you're living. If you cannot manage your money better, I won't know how to make it work. I can't. If I put you in life insurance and you can't make the premiums because of your budget, then that creates problems for you and me. As the agent, I don't want to submit to a company, a client that's going to be lapsing on their insurance. And you don't want to be in that situation either because they do report that information. They will cancel you, and that will become a part of your insurance record. Okay? It's not funny. You don't want to get in that situation. The boys all talk to each other, and people that don't pay their premiums are not considered really solid people. You want to look carefully at every aspect of how you're spending your money. And we're now in a time where money is going to get expensive, more expensive, and the cost of living is going to get more expensive as you try to figure out, how am I going to pay my bills? Good question. Start with your income. Do you need to bring in additional income? Do you need to take on a second job? Do you need to start your own business? Now, before you say, I thought about starting my own business, well, don't start your own business if you don't have money set aside to capitalize your business. Okay, now there's some exceptions, but for the most part, you are going to need a little money to help your business get started. Okay, that is just a given. So I want to go on to how to control your spending, because that might be easier than how to bring in more income, particularly if you have health issues, which after a certain age, you're going to start having health issues. But let's decide now that you are choosing to spend like you do. Nobody's making you do this. Spending and overspending, spendaholics, spending addicts, that is a habit. It's a habit that you develop by not understanding that money that's put away can grow and help you to become very stable, particularly if you're young. If young people would stop spending money willy-nilly at the bar, at opioids, I don't know. Young people do a little different. CBDs, partying, having a good time, feeding their friends. If you will stop that habit because you choose to, you may find yourself really doing well. So I say for men and women that men and women are both guilty. Women may spend money on clothing and shoes. Men spend money on toys. Okay, toys. What's those little things on the TV, the little app things? They spend money. They spend a lot of money. Okay, they do. Don't think for 1 minute that women are the only people that blow up the mall. Go to where they sell gym shoes. You'll see the men's side is packed with men getting ready to spend $200+ on gym shoes. How many gym shoes do you want? Can you resell them and get money? Can you burn them to cook your food? These are things you have to think about when you talk about how you look at spending and whether it will work for you or not. How to become a better spender. Motivate yourself by having a clear picture of the benefit to you of spending your money on the things you know you should. Okay? There are some things that are necessities. You can do that. Get your attitude right so you don't think of savings, but rather benefit spending. Okay? The savings component for a lot of people, if you are an addict, I don't know the treatment if you're an addict, other than self-discipline and maybe a psychologist to find out why you do this. A lot of this stuff is rooted into learned behavior as a child. If you grew up with nothing, you feel like you got to buy it all when you get money. Or if you grew up with all these luxuries, you may feel that you got to spend it all because you have to maintain that lifestyle. Both of those are bogus. You are an adult and you have to make choices as to what you want to do and not do, knowing I'm telling you this ship is going to land. It is. That's why I'm doing this. It's going to land. And you're going to find yourself, unless you're a trust baby and you're counting on your parents dying and leaving you a lot of money in a trust, and just keep your fingers crossed because there's no guarantee that's going to happen quickly. And there's no guarantee that the trust that you think they have shows you as the beneficiary. Yes. People are doing all kinds of stuff today. Get clear in your mind that self-discipline is not self-denial. As I explained earlier to a group of people I was talking to as a part of their class, I do seminars all over. How many pair of shoes do you want? How many can you wear at the same time? Why do you feel that self-discipline is self-denial? Self-discipline is maturity. It shows that you have determined what works for you. Okay? Self-discipline. The ability to look at stuff and not feel any kind of emotional pull. Oh, I gotta have it. No, you don't. That's America. That's marketing. That's TV. That's internet. That's Facebook. That's Instagram. All that stuff is promulgated to pull you into a certain type of behavior to benefit somebody else. Self-discipline says, if it don't fit, I'm not going to force it. I'm moving on. I'm not doing it. Don't think of budgeting as establishing what you can't have, but rather what you can have. Now, if you're very succinct about your budget, and after making the carve-outs and what you're just blowing, now you know what you can have. Now, there are exceptions to the rule, and I want to make sure you understand that. And that namely means that if you have extra money in your budget and you've maxed out on all of your 401k plan, your savings, you've got your insurance, all these things are paid and you got chunk money, then I don't care. Blow some of it. Don't feel like you're in jail and you're having to mind your manners. You can splurge, but once in a blue moon, and don't make it a habit, particularly if you're a spending addict, because that will spiral you right back on again. You'll open up the newspaper, you'll see there's a big sale going on. You'll open up the internet and you'll see there's a big sale going on. All these are devices and traps to break your self-discipline. So stop. Reward yourself once in a while. Okay? Reward yourself, which is, you know what? I have done really good. And I think I want to treat myself to dinner at a nice restaurant. And that's it. Okay, I'm not taking friends, family. No, but I'm taking me. You want to keep a record. Whatever you do, you want to keep a record of what you spend. You can get a little bitty index card to start where you just scribble down stuff. That'll tell you how much candy bars really cost you. And if you're spending your money like that, then go to a wholesaler like Sam's or Costco and just buy them in quantity, put it on your budget, and just eat them when you have an urge. 50 cents for a candy bar is a lot more than $1.70. And it does add up over time. It really does. Again, learn to spend by choice, not by impulse. Okay? The system is about impulse. I'm victim as well. I'm not telling you that it can't happen to me. I'm telling you the marketing machine is real. And if you're not careful, you will find yourself buying something impulsively. Now, I will give you a case in point for myself. And that is that I have a particular affection for Egyptian cotton sheets. Real Egyptian cotton sheets. Not the fake ones where they say like Egyptian. And you look up and it's a polyester blend. That's not what I'm talking about. I'm talking about real Egyptian cotton, 400 count and above, $600 for a set. Saw them on sale. They were shutting down that particular cycle. I got them for $150. Now, some of you can say, that's too much money. I'll go with polyester. I'm not going with polyester because it makes me itch. Okay? So I saw them, and they said, with this, you get rewards, and I would have paid it off quickly, which I did. So I got rewards points, I paid it off, and I got my Egyptian sheets I haven't seen them that cheap since. I probably should have got more. But my point is that you can do this. Promise you, you can do this. Use the power of education, which is what this show is all about, and understand the marketing machine called America. Don't buy on impulse. Don't. Comparison shop on all major items. Please, pay cash. That'll shut it down. Wait for special sales. Double check major purchases. Learn to read. Oh, this is a big one for seniors. Read and understand advertisements. Read the labels. Stay away from anything fructose. Bad. Stay away from polyesters, which is a derivative of oil. Polyesters come from oil, petrol, okay, like nylon pantyhose. That's why if you get a match near them, they'll catch on fire. How you like that? Use a list for the grocery. I'm guilty of this. I'm getting better. If you go in the grocery store hungry, you will buy everything. You will buy everything. Blow your budget. I'm not kidding you. Blow your safe eating, healthy eating. Doritos, fiery, yum. No, $3 for a bag of Doritos is a lot. Shop alone. The whole thing about bringing your friends, particularly if they're addicts, is you're going down to. Look at private label brands rather than paying for packaging and the sales pill on TV. Now, some private brands, and this is what Procter & Gamble said when they said they weren't lowering prices because their brands were already top of the line, and if inflation pushed them up, so what? Because you're going to buy their stuff. And they're probably right because their sales have increased under inflation. Learn to uncover gyps and scams. Don't be stupid. You get what you pay for. And finally, as I close out today's show on budget and controlling your spending with your budget, is never expect something for nothing. Our grandparents taught us that. What makes us think things have changed? I watch people spend billions of dollars on slots and casinos and everything else. What makes you think you can beat the house? What makes you think that you won't lose everything? Why are you expecting something for nothing, which is nothing but greed? Yep. Bad. No. Put in a budget, allocate what it's going to take, and then at the opportune time, make it happen for you. I wish you only the best of success because we're going into tough times. Everything is upended right now. We have not reached the status of food famine, but it is coming, which is prices are heading up. Food banks are slim right now so that people can't take advantage of free food. Everybody's dealing with this press, but you can get through this if you will adopt self-discipline, if you will have confidence in your ability to stay on track, if you can motivate yourself by saying, I'm not doing that, which is what I tell people all the time. Oh, let's go shopping. I'm like, I don't have stock in that company. I'm not doing that. I'm good. I don't need another thing. You really? That's you. Don't bring it by me. That's my take for today's session of The Power of Money with Michelle Graves, talking about your budget and saving spending strategies. I wish you well. I hope you will make this a serious priority. It all begins with you knowing what you're doing with the money you make. I'll talk to you soon. I'm Michelle Graves. God bless you all and stay safe. Bye-bye.